Oh, good day, traders. Welcome to today's episode of my weekly Forex Forcast. This is Onunako Tochukwu speaking for Lazarus Capital. As you all know, we do this every Saturday, to bring you guys, our analysis and how we intend to trade, the Forex market in the coming days. And as I told us, my trade strategy is very simple. I'm a trend pullback trader. Once I've analyzed the direction of the market, I want price to come to my area of value. From there, I wait for my market participants to come in and I join them. And my area of value is a support or a resistance area that price have tested in the past. I trade on the 4-hour time frame. I do my analysis on the daily time frame. So once price comes to this area of value and my market participants come in, I will join them. For instance, if I analyze that the market is to the downside, I wait for a pullback to a resistance area. From there, when the sellers come back, I'll join them. Once I've analyzed that the market is to the upside, I wait for price to come to pull back to a support area. When my market participants come in, which are the buyers, I'll join them. I also want to take my Fibonacci and see if this area aligns with my Fibonacci 5061.8. Sometimes I also use the 38.2. I also, have a strategy for the ranging market, because sometimes the market might not be trending and it will be ranging. So when the market is ranging, I wait for price to come to a demand or a support area. From there I buy, or to supply or a resistance area. From there I will sell. Even in this ranging market, I also still wait for a pullback. While the market is ranging, I also wait for a pullback. Once the market have bounced up from a demand area, I wait for market to pull back. When the market have bounced up, if I did not join the market from the demand or the support area, if I'm bullish, if the market move out from there without me, I can't take any entry again if the market did not come back to a support area. So even in the ranging market, I still wait for a pullback if I did not join the trade from the demand area or the supply area. So without wasting our time, having said that, let's just go right into the business of the day. So we're starting with the BTC USD. I've done this analysis since this month. We'll be analyzing the BTC USD. All these pairs, we'll be analyzing them. We've not gotten our entry, so we'll not waste our time. We'll just do what we are doing is like a recap of what we've done before. So the BTC USD is to the downside. The BTC USD is still is bearish. I'm still bearish on the BTC USD. So I'll still be waiting for price to come to my location. The price have not gotten to my location. Price have not gotten to my area of value. I'll be waiting for price to come to my area of value. This is that area where I'm looking to sell the BTC USD. Price is here to get there. This is that area where I'm looking to sell the BTC USD. Price almost get there, came back down, and then I think in the coming days we'll see price rising to that location. Let's go to the 4-hour time frame. So this is the area I want to sell the BTC USD from. We'll be waiting for price to come to this area since this month. Price is not yet there. So maybe in the coming days we'll see price rising to this area. So that's all we'll be waiting for. You can see a good support area that will be coming back to act as a resistance. From there the price will come down. If I take my Fibonacci from this location, and this swing guide to the swing low, you can see that this area is a good. You can see this is a good resistance area where this market dropped down from. If you stretch back, you can see that resistance. Fibonacci 5061.8 at this point. If I even take the Fibonacci from this area, you can see that this is a good 38.2. Even from here, we'll have a 38.2. If we even take this one, we'll have also a 38.2 here. So we'll just stick to, this is a sweet spot for us. 5061.8, strong support. From here the market went up, but will be coming back to act as a resistance. From there we'll expect the sellers to take this price down from this location. So let's remove this. So in the coming days, what we'll be waiting for is for the BTC-USD to rise into this resistance area. For market participants come in, they will join them and take the price down. We will not be buying the BTC-USD until price closes above this resistance area. If the price did not close above this resistance area, we are bearish on the BTC-USD. We will not be buy. Once price close above this resistance area, that's the only time we'll be looking for buy setup on the BTC-USD. Then we'll wait for a pullback. So this resistance that will turn to support area. Then if the buyers come in, we'll join them, join the buyers from here, then take the BTC-USD back up. Anything aside that, we are bearish on the BTC-USD. So we're waiting for price come to this resistance area. If the buyers come here and they fail to close above and they got here and they become weak, we'll wait for the sellers, and when they come in, we'll join them and take the price down. TP1 will come back to this 100% replacement at this point around 58.442. Then TP2 can come back to this demand area at I think I'm seeing this area. Okay, 53,000 will be okay. 53,000. So let's move on to the next pair, which is the Euro-USD. So for the Euro-USD, our bias in the coming days will be bearish. For the Euro-USD in the coming days, my bias is to the downside. So I'll be looking to sell the Euro-USD in the coming days. So I can see that after this change of character at this point, the sharp pattern traders will call it double top. Price close below the support area and pull back to this support, use it as resistance, and since then the market has been dropping. So since then we'll be seeing a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Characteristics of a down trend. The market have not given us a higher high. As long as the Euro-USD is trading below this resistance area at 1.16861, the market is still bearish. And we can see our 200 EMA price is trading below our 200 EMA. So my bias for the coming days for the Euro-USD is bearish. The only time I'll be selling the only time I'll be buying the Euro-USD is if price closes above this resistance area, then pull back, resistance that will turn support. This is the only time I'll be buying the Euro-USD. Aside that, as long as price is trading below this resistance area, I'm bearish on the Euro-USD. I'm bearish on the Euro-USD. Also, there's a support area at this point whereby if the price gets to, I'll be looking for buy. That will be this support area. The market pull back to this place. You can see resistance, resistance, support, come back as support. If market come, if the Euro-USD drop to this support area, I will be, you can see this is my 5061.8 Fibonacci, and it's a good support area. Swing low, swing high, 5061.8. Resistance, resistance, support, come back out as a support. There's high chances for the buyers to come back from there. So, but for now, I'll be bearish on the Euro-USD in the coming days. So what I'll be waiting for is I want price to pull back to an area of value, and I'll be looking at this area as a good location for me to sell the Euro-USD. Sorry, looking to sell the Euro-USD from this end. I stretch this to this point. You can see, I have a good area here. Take all this. Okay, I'll be looking at this resistance area. Why? Because I see if I look at the past, I can see support, 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 come back to act as resistance. If I take my Fibonacci from this swing high to this swing low, can see that this area lined up with my 5061.8 Fibonacci. You can see, let me just bring this back down here so that I will not confuse myself. Okay, cool. So this is a good, area of value. Acted as a support, come back to act as resistance. Fibonacci 5061.8. So you can see the Fibonacci 5061.8 aligns with, this, good support area on the daily time frame that will be expected to come back, and market to use that as a resistance to take the price down. So let's go to the 4-hour time frame. So on the 4-hour time frame, we can see that area is a good one. Let's go to the line charts. You can see support, come back to us as a resistance. So in the coming days, I'll be waiting for the Euro USD to pull back into this area. Then when the sellers come in from this area, I will join the sellers and take the price down. TP1 will come back down to this 100% retracement at 1.13281. Then TP2 will be at this higher time frame target at 1.11275. Stop loss can be above this resistance area at 1.15565. So in the coming days, I'm bearish on the Euro USD. Wait for price to rise into this resistance area. Support, turn to resistance. When the sellers come back, we'll join them. Let's move over to the next pair, which is the gold. So for the gold, the gold is still, bearish. In the coming days for the gold, I'll be having two buyers for the gold. But the main entry for the gold is, the sell entry, because the gold is still bearish. You can see, price have been coming down, has been creating lower lows, lower high, lower low, lower high, lower low, lower high. It failed to give a significant low here, and this is like an equal low. Even the chart patterns can be looking at a potential inverse head and shoulder here, but guys, like I told us earlier, I'm not a chart pattern person. I'm not a chart pattern person, though I know how the chart pattern works, but I'm not a chart pattern person. So nevertheless, even though the gold has been having difficulty creating a lower low, it has not created a higher high. Hence, this is the area that the market dropped from. And since when this market dropped from this place, price have not closed up. But as long as the gold is trading below this resistance area, the gold is still bearish. I repeat, as long as the gold is trading below this resistance area, the gold is still bearish. Let me remove this. I want to use my rectangle, my horizontal line here. So the market dropped from this place. There was a support here. Price came there, I used it as a resistance, and the price came down. Now, in the coming days, I'm bearish on the gold, because I can see that price is trading below my 200 EMA, and price are making lower lows and lower high, and we've not seen, a higher high. So, the original bias for me for the gold is to the downside. So what I'll be waiting for the gold, let's go to the 4-hour time frame. In the coming days, I'll be waiting for the gold to pull back to this area. We're looking at this area here. Let's go to the line chart. Waiting for the gold to pull back to this area. You can see this is a good resistance area. If we take our Fibonacci from this, you can see we have the 5061.8 at this point. So in the coming days, we're waiting for the gold to pull back to this resistance area. From there, we'll wait for the sellers to come down. We'll join them. But guys, there's another thing with the gold. Let's go back to the daily time frame. I can see that there is a demand area here. It is this demand area that has been drawing this gold. You can see the market. This is the demand. You know, the market moved from demand to supply, supply to demand. So, having left the supply area, the market next destination is the demand area. This is the demand area where the gold is coming to. And you know what the market always does? When it's close to a particular area that it wants to buy from, before it gets there, I've explained these things to us before. When the market is coming to this support area now, before it gets to that support, it will create another fake support at the up, so that traders will come and be trying to buy from that support, not knowing that the main support is below. The market will engineer a fake support, and traders will come and try to start to buy from there. Their stop losses will be below. Then the next thing that the market will come, take all of them out, and come down to that main support from there to buy. So I'm looking at this area here as that main area where the market is. You can see there are some pips below here that the market have not tapped into. So it's because the market is creating a fake support here. You can see there are some pips here. If you go to the line chart, that's why you must learn to be using the line chart. Don't just use the candle chart. Learn to, if you do not go to the line chart now, if you're in the candle, you think the market have gotten to this support, you can see. But if you go to the line chart now, you see that there are some pips remaining. So always learn to use the line chart. So in the coming days, I'll be looking at two things. To sell from this, when the market opens and the market go to this resistance area, I will sell. But if the market come back down into this support area and give me a buy setup, I will buy. Because of this support area that is here, I will buy and take the price back now. I'll take the price up. So in the coming days for the gold, if the market come down to this support area and give me a buy entry, I will buy. If it goes to this resistance area and give me a sell entry, I will sell. So if you are selling from this resistance at 41.62, stop loss can be above here at 42.21. Then your TP will come to this support area at 39.27. If you are buying from this support area, your entry will be at that 39.27. Stop loss can be just below here at let's say 38.99. Then your TP will come to this resistance area at 41.71. So in the coming days for the gold, I'll be looking at two scenarios: to sell from this resistance area or to buy from this demand area. Let's go to the next pair, which is the Nasdaq. So for the Nasdaq, I told us that the Nasdaq, I can see that the Nasdaq have been trading in a range, and I told us if the market is ranging, I will buy from demand or sell from supply. So you can see that the Nasdaq is now coming to this demand area. So in the coming days, what I'll be waiting for the Nasdaq is to see the price is almost at the demand area, but not. There are still some pips remaining. You can see there are still some pips here. There's not continue there. So in the coming days, I want to still see some movement. I want the price to still give me some movement. Maybe let's see, there's a resistance here. There's a resistance here. So the sellers are coming down now. If they come down and they fail to close above and the buyers come back and close above this area, can be buying the Nasdaq if the buyers. If the sellers come and they can't close below here, if the sellers come and they can't close below here, they get here and they stop, and the buyers come close above this resistance area, I'll be buying the Nasdaq from here. But if in the coming days the Nasdaq closes below this demand area, then I'll change my bias from bullish to bearish, and I'll be waiting for a pullback into this support that will turn to resistance from there. I wait for the sellers to come in and I'll join them. But if the sellers fails to close below this demand area, they get here, they stop, and the buyers come in, I'll join the buyers from here. They'll take the price up. What I'm looking at in the coming days for the Nasdaq is a bullish setup from this demand area, but it's not compulsory that we'll get it. Whichever way, if the market closes below this demand area, then we'll just wait for a pullback to this demand that will turn to resistance area. Then when the sellers come in, we'll join the sellers from here and take the price down. But my bias for these coming days for the Nasdaq is to the upside. So I want to buy the Nasdaq from this demand area. So if the sellers come and they can't close below, they get here and they stop, and the buyers come back in. This is the area where I'll be buying the Nasdaq from. So let's move on to the next pair, which is the Usoil. So for the Usoil, I told us that for the Usoil, I'm bearish on the Usoil, even though we are seeing this strong move. And some people will be like, how can you be bearish on the Usoil when the tension in the Strait of Hormuz is still going on? Guys, I will not tell you that I don't care about what is happening in the Strait of Hormuz. I care about what is happening in the Strait of Hormuz, but I don't have those informations. So the only information I have here is my price action. So I work with my price action. So I know the tension. There have been some recent escalation in the Strait of Hormuz. The tension is getting hotter by the day. But for the Usoil, I'm still bearish. Despite this year, I'm still bearish. I've seen that price have been in this range. Price have been trading in this range, and we saw a break below. We saw price closing below this support area. So based on my strategy, once I'm looking at a ranging market and price closes, this market is ranging now, and price close to the downside, I'm bearish. I'll wait for a pullback to this support that will turn to resistance. From there, I'll continue to sell. Whatever that is happening in the Strait of Hormuz, I don't know. I will not say I don't care, but this is my strategy, and that is what I'll follow. I won't be surprised if when the market is about coming down, they will tell you they are now signing peace agreements, and the market will start to come down. So no matter what, I stick to my strategy. No matter what is happening, I stick to my strategy. It's the price action that I'm reading. I'm not fully a fundamental trader. I'm a price action trader. I'm not a fundamental trader. So I just follow what the price action is saying. So in the coming days for the Usoil, I'll be waiting for price to pull back to this area. And I'm saying that there's a good location at this point. I'm saying there's a good support here. If I take this support, so I'll just zone this support and this support. I'll just zone the two of them. Let me remove this one. This support and this support, I'll just zone them. Let's go back to the candle. I can see that there's a gap at this point. We can see this gap here. So I'm waiting for price to come there. Support, and there's a gap here. So I want price to come into this place from there. If the sellers come in, I'll join them. If I take my Fibonacci from this area, you can see I have a good, from this swing low to this swing high, swing low, I have a good 5061.8 at this point. So this area is good for me. Swing low, swing high, swing low, 5061.8. Support, line chart. Support. There's a gap here. Let's move our Fibonacci. Price come back there and we'll go down. Let's go to the forward time frame. So the forward time frame, that's that location there. So you can see that gap is still on the forward time frame. So in the coming days for the Yes, I'm waiting for price to pull back to this. Price is already closed here. To pull back from this, anywhere from this gap to this area. When the sellers come in, I'll join the sellers from here. I will not be buying the US oil until I see a close above this area. If the price closes above this resistance area, then I'll wait to pull back. Then the price gets to this resistance, I'll turn to support and cannot close back below. Get here and stop. I'll wait for the buyers to come in and I'll join the buyers from this point and take the price. This is the only situation where I will start buying the US oil. I will only start buying the US oil if the price closes above this $86 per barrel. If price closes above this $86 per barrel, then I'll wait for a pullback, then I'll buy. As long as the US oil is trading below this $86 per barrel, I'm bearish on the US oil. I don't care what is happening in the Strait of Hormuz. If price fails to close above $86 per barrel, if price fails to close above $86 per barrel and is trading below $86 per barrel, I'm bearish on the US oil, irrespective of what is happening in the Middle East. You can see even the trend line traders, there's a trend line from this point here. There's a trend line here connecting, these prices. So I won't be buying the US oil until price closes above this area and I get a pullback. So this support and the buyers come back. This is the only situation where I'll be buying the US oil and take the price back up. But if price fails to close above this resistance area, so I'll just be waiting for a pullback into this resistance. When my sellers come in, I'll join them. Let me remove this. TP1 will come back to this 100% retracement at let's just use this is $67 per barrel. $67 per barrel. Then the TP2 can come down at I think this place is okay at should be like at $58 per barrel. So TP1 at this point, then TP2 here. Let's go to the daily chart. Yeah. Now I think this place is cool. Yeah, it's cool. 65. Anywhere in between here. Okay. I think there's $65 per barrel here, which is a good one. You understand? Okay, guys. Thank you for staying this long. Until I see you in the next week video, please take care of yourself and remain blessed.